Ladies and gentlemen, open banking pioneers, hello, and a very, very warm welcome. Thank you for joining us around our campfire. We're going to be talking about AI. Yes, that hot topic, but AI and open banking, it's incredibly newsworthy at the moment. So we've gathered industry experts around our campfire from a cross-section of our community to talk with Will Shaw, the financial reporter at Bloomberg. So Will be hosting our panel. But before we go into that, I just want to set the scene a little and look at some numbers. Now, everybody working in open banking should be very proud of the progress that we've made as an industry. Here in the UK, we're now at 7 million open banking users with just over 1 million transactions per month, which is a phenomenal growth in less than 6 years. And if you think about it, in the UK, in that 6 years, we've had to build infrastructure, develop an ecosystem, and create a market, and also educate a market, I should add. But by anybody's measure, as an industry, we should be amazingly proud. And it's been a fast and very impressive adoption curve. Yet, when you look at the adoption rates of open banking, it looks positively sedate compared with artificial intelligence, or to be more specific, generative AI. Now, when ChatGPT was launched at the end of 2022, it achieved, and these are some colossal numbers, 100 million monthly active users in just 2 months, which is what I'm saying about we're all so impressed with what's been happening in open banking. Look at what's happening in what is an incredible performance in the fastest growing consumer even application in history. So I'm curious about the impact of open banking and AI. The impact of AI really can't be overstated, and we've all seen and read the recent government summit that happened at Bletchley Park, and that's really a testament to it. And in a world that is moving at such a pace, we're going to look today and discuss whether it needs to be regulated and look at what we can do and how we can work with AI. Now, we've all been talking about AI, and when we surveyed our community, this was one of the topics that was really on top of the agenda to have a deep dive. And it's very easy to look at it, we vision it as a world without drudgery, okay? A world which machines are doing all the boring jobs so we don't have to. And consumers no longer have to fill in forms, so taking away that mundane part of the work. But also, we're hearing that employees will be given more time to pursue creative, strategic, and simply just more interesting tasks because they've been liberated from the manual labor. Now, I'm actually sat in JP Morgan's offices, and Jamie Dimon, who is the chairman and CEO, he believes that we could be working 3.5 days a week. And now some of us will think that's a great thing, and views on this will vary. Now, that's the dream anyway. So let's actually have a look at what would be a competing vision to that. The pessimists would say that AI isn't the super secretary of tomorrow. It's a serious competitor, and it will actually outperform humanity, making billions of us redundant and potentially wipe us all off the face of the planet. We've all read and seen those sort of doomsgloom predictions. And when Elon Musk was rather gently interviewed by Rishi Sunak at the Bletchley Park AI conference I mentioned before, he warned of a future without jobs due to the rise of artificial intelligence. Now, in this portent universe of unemployment, it's a very negative prediction around AI. But Musk's prediction certainly captures the abiding fear that some people are having about AI stealing our jobs and turning humanity into a second-class, second-rate, sort of slow-coach species. Now, we have a sort of a different view here. We're here to address some of those fears, that's for sure, and have an informed and objective conversation. Now, for AI to work, we need data sets at scale. Now, if you think about it, open banking, open finance, open data potentially can provide those data sets. So I don't think there's a chicken and egg scenario here, because certainly you need the you need the data before the AI. Now, and I think this is the big exam question for the industry. Just imagine how we can blend open banking and generative AI to help improve the use cases and take our industry forward, to help make lenders make smarter, faster decisions on loans. Open banking platforms bringing together the need for customer data, of course, always with secure consent. AI will help analyze that information, and we can make better informed lending decisions. Now, there is a huge amount of incredible opportunities and synergies created during the dual ascendancy of AI and open banking, open finance, and open data. And if we can get them to work together, we believe that something very, very special can take place. And if you think about it, if you bring it right back to basics, data is a great enabler for AI. And we are in an industry that uses a huge amount of data. Now, open banking, open finance lets us use data securely. So those data sets are flowing securely between lenders in the example I use and customers. So it's all about together, AI and open banking. How can we unlock the power of data and drive forward a fairer, faster, and more accessible financial services industry? And we've got some experts on the panel, and we're going to be having a deep dive into that and look at financial inclusion as well. Now, before I do hand over to our incredible host, Will, and his wonderful panel of guests, I'd like to just share a few more numbers with you, just to get some context here. Now, McKinsey have predicted that AI could deliver up to $1 trillion of additional value each year. Those are colossal numbers. And you will also have heard us quote a larger number from Accenture, their famous open banking forecast, which said that open finance could put $400 million of revenue into the global economy. So Accenture also saying that 90% of all working hours in the banking industry will be impacted by large language models such as ChatGPT, and predict that half of all the work time in the sector could be automated. So whether you're looking at the predictions from JP Morgan, McKinsey, or Accenture, the numbers are big, and that really does reflect the size of the opportunity. So I talked about some of the doom and gloom, but what we're hearing from our industry, that the future is bright and it's not very far away. ChatGPT shows us how quickly a disruptive change can occur and shift the ground beneath us at unprecedented speed. Well, in fintech, we're good at that. We're agile and we can move at pace. Now, let's just have a think for a moment. We believe that AI and open banking could fuel one of the next big bangs of economic growth, and that the UK can be right at the center of this supernova. So I truly do believe, but it's the panel that we want to hear from, that the future is very, very exciting. So please get involved. You can ask your panel questions, and at the side of your screen, you can see a Slido poll, which, as you know, we share on LinkedIn and across all our social media channels. So please do get involved. Now, we hope you're as excited about the opportunity ahead as we are. And if you're not already excited, believe me, you certainly will be after hearing from our distinguished guests today that we've gathered around our campfire. I can assure you there is nothing artificial about their intelligence. See what I did there? So without further ado, let me hand you over to Will and his panel of absolute naturals. Will, hi, how you doing?
I'm very well. Thank you very much for your introduction, Helen. So first up, we've got Karen Wall, who is Open Banking Product Lead for EMEA for JP Morgan. Karen, thank you very much. Thank you very much for joining. So this is going to be about a 10 or 15-minute conversation. Perhaps you could start just by telling us a bit about some of the opportunities for big traditional financial institutions like JP Morgan to work together with fintechs to help improve open finance broadly.
Yeah, well, thanks for having me. I'm happy to speak to it. So ultimately, when you think about the payment ecosystem and all of the participants, it's not a solo game in terms of one institution working on their own versus another. It is a collaborative effort and really in the partnership space. So when you look at open banking and the next advent of open finance, it really is working with the likes of fintechs and also specialists in this area to really power, one, the adoption, but standards, frameworks, and ensuring it's delivering what it's intended to do. So that may be via regulatory means that we're able to do A, B, C, D in a given jurisdiction. But ultimately, when you look at the partnerships, it's really to see what can we collectively do to enable or unlock the best use cases dependent on the target market that you're engaging with. And JP Morgan, we very much look at our partnerships and to see how we can deliver best outcomes both for our clients and their end users if applicable.
Are you able to share examples where JP Morgan has done that, or where you've seen other companies do that?
Yeah, so in terms of our positioning, we've definitely worked with different fintechs in the space of potentially looking at payment processing, accessing wider, collective intelligence and seeing how we work in that space. So it really depends on the focus area that you're in. I think you can appreciate an institution as large as JP Morgan. We've had some public investments in the fintech space and then some partnerships that we work with to deliver solutions. And if you look at that, it really is multifold in different areas in terms of geographical reach, but also the products offering we're trying to serve. So when you think of JP Morgan and payments, it really is any payment anywhere. And that means we have to partner with different institutions, including fintechs, to deliver on that statement. So that's where you look at it. And then you look wider across outside of JP Morgan and you look at different participants. What Wise is doing with Swift is very interesting in the payment space. Then you have other institutions that are looking at how can you bring, digital kind of technologies outside of the fiat currencies that we're currently offering, but in the fintech space with traditional institutions. So it really is quite varied, but it's the power of the partnership is the key message. And again, it can span across multiple areas in both open banking, open finance, and traditional payments.
Are you able to speak to any of the successes that you've seen in this?
So it's a good question, and I'm just going to speak on a personal level here. If you look at, and I'm moving back in time pre-open banking, if you look at mobile money adoption, particularly in Africa, it was a way of inclusion for multiple people to get access to be able to spend their money and be able to receive money. And that was done before open banking. And it was really because of the power of mobile phones. Then you look at, okay, what's advent of that in Europe or further afield? And you look at, well, what did e-money bring? And multiple players came out of that space. Some of the big fintech names that you know are now global brands because of the e-money revolution. And that's not just a single geography. You're really looking at the likes of APAC in that space. You're looking at Europe, Middle East, Africa, and also LATAM. So it's been a global phenomenon. So I think it's safe to say that we do have examples of where technology is driving good. It's also driving financial inclusion, but it's been across multiple players. It's not a single institution driving those advancements.
What ethical considerations do people need to think about, and what are the risks in terms of bias and generally transparency when people are working with AI on open finance?
Yeah, no, and this is a key topic, and it's also one that people rightfully have front and foremost in their mind. Ultimately, you have to work within the bounds of trust and safety. One, what are you currently, I'm just going to talk about a banking institution at the moment. One, what are you currently adhering to from a regulatory level, but also from a transparent nature? How are you setting up your product stack to deliver good outcomes for your direct customers or the wider ecosystem? And I'm talking about payments here, but when you look at that, it's How are you driving those insights from the initial data set that are informing that? So how are you collecting your intelligence, a collective intelligence or data that could be across your full institution? Are there siloed views of how you're applying models or deploying AI versus different lines of business? So is there a collective approach in the institution regarding the safe use of data, the bounds at which the data can be used, but also a governance and a rigor to it to ensure that one, there's oversight of it, i.e. you have a governance model to make sure that the people that are in charge of actually running these models, that they're being sense checked. And then also there is the regulatory bounds of it. What are regulators thinking? How can you consume the data? How are you meant to deliver those outcomes, and also the transparency as to if end users are having their data consumed, what is it being used for? Is it being used to enhance product offerings? Is it being used to enhance customer experience? Is it enabling greater payments processing speed? Is it delivering fraud protections? And those are kind of key components that everyone should have in the back of their mind. If we deploy this technology, and for some institutions it is early days, so they're still learning as they go, but those are core tenets of their business today. How are you deploying products to market? What technology are you using? And what information is informing that deployment and oversight of the product to ensure good outcomes?
And what are the risks in terms of bias and generalizations made by AI? And what are some of the potential worst case scenarios if you don't get that right?
Yeah, and this is a key component. So when you look at bias, it's the unintended consequences. How did it get built into the model in the first place, or the technology that's been deployed? So first and foremost, it's back to how are you generating that pool of intelligence or data set to inform the technology you're deploying to either make predictive outcomes or to bring further insights. So LLM, large language models. So it's one, how are you informing it? Once you have that data set defined, what does that look like in terms of potential bias? Do you have a certain cohort of individuals that are, excluded from a product set, e.g. credit, lending, giving opening bank accounts, so on and so forth? And from there, why is that outcome possible in the first instance? Is it because of it's been over-engineered, i.e. it's been overly constrained, that, there's been an interpretation of a regulatory standard or an industry standard that has driven to this part, particularly maybe financial crime concerns or sanction concerns? Or is it that it's a first-time deployment and the entity is learning as they go, so therefore they have to take back what they learned and ensure they take back the learnings and recalibrate as they go to remove those biases were identified?
And in practical terms, like what can a company that's using AI do to make sure that that bias doesn't creep into the system?
Yeah. So there's a couple of things there. One is a collective thought process around the models, not necessarily an individual running the model or the constraints or the framework of the model on their own. So like good old fashioned maker checker, but in a more technological sense. So who's really informing what you're looking for? Then the next one is from a governance oversight standpoint. There are shifts. There's new technologies coming all the time. We see it, and I'm sure in a year's time we'll be talking about something else, not just generative AI. And then you also have the regulatory landscape developing. So it's always making sure what was built for today is actually fit for purpose for tomorrow. So it's not just about actually saying, how do I check from the outset, but how do I make sure we develop good practices to ensure the health of the model going forward? So it's continuously iterating on it. It's not just build once and leave it and park it.
Thank you very much, Karen. I really appreciate you going into such detail on that. So we're going to move now onto the panel discussion. I won't introduce the panel individually just because I know everybody can see, whoever the viewers at home can see people's names and titles written up on the screen. Karen, again, like which opportunities in AI are you most excited about? Like where is there the most potential?
Yeah, so I'm really going to speak about kind of the area I work in, just so I can give some context to my answer. Where I see the most potential is what some might call self-driving treasury. I sit in the payments arm of an investment bank. So that means we really look at wholesale movements of money. So how can you gain real-time insights that actually can drive more meaningful decision making at a liquidity level for corporates, for central banks, for other banks, for large tech, fintech. There are multiple companies that could benefit from this that would then have a knock-on impact to wider individuals who are doing their payments day in, day out. So for me, it really is around moving from predictive analysis from machine learning model to actual real-time insights that are gaining collective intelligence. But you can leverage some of the insights you're getting from open banking or potentially open finance in the future to drive a lot of this. So it's been able to join the two capabilities or technology sets together to ensure that, one, you're actually able to get them to talk to one another. That sounds easier than it is, but being able to actually apply real life application of this technology. And I think it's fair to say it's early days for some institutions, us included. So we're going to learn as we go. But those are some of the use cases that, in our space, in an investment banking space, we can consider. And I'm sure the wider panel will have an equivalent for their area.
Yeah, thank you very much, Karen. Would anyone else on the panel like to speak to that, about the opportunities in their particular area that they see coming from AI and generative AI and large language models in particular?
Hi. Well, yeah, I'd love to actually. I think I'm going to draw something from actually AI in oncology, which has been used to help the surgeons make better decisions, faster decisions for their patients, so they can treat them better. And drawing on that in our world is, how do we make better decisions for customers? And so I think I'm particularly excited about where we can use. We've got lots of people who are very specialized, very capable underwriters, customer service agents who can talk to customers and help them with products and services, but there's only so much individuals can do. The purpose of using AI in financial services is to really kind of, I guess, modularize and bring together some of that stuff that is output driven from the metrics. So use data to drive metrics rather than metrics to drive the data, to make better decisions, so people can help people that need help, those kind of outlying cases, people who really do need support, rather than a broad brush approach for everybody. Let's really target the vulnerability with the human help, whilst we enable more people to have access to products simply, quickly, easily using AI.
Great, thank you. Would anyone else like to chip in on that before we move on to the next point? Michael, ChatGPT, as Helen mentioned earlier, it achieved, it made headlines all around the world. It achieved record-breaking adoption very quickly. What might it take to get a similar acceleration in regards to AI tools in open finance, do you think? And are there any signs that we're reaching any kind of tipping point on that?
That's a great question, Will. First and foremost, thank you for having me. I think what it would take is AI literacy, and what I mean by that is education. I think in similar technology ways, what helps is people using the technology, and they learn how to use it by doing. So there's learning by theory and there's learning by practice, and I think there needs to be a very good balance between both of those for us to reach, critical mass in that sense. It's great that people are using more ChatGPT more in this sense, but I think maybe having more companies develop specialized AI tools for open finance could be very good. And in parallel, providing training courses for people to maintain and to get up to speed with the technical levels that they need to use them. Any signs? Well, that's again a very good question. I think financial services firms are very good at doing internal training exercises, and I think a lot of their initiatives come out. I think we're going to see a lot of pilot schemes coming out the next few months. So I think the more pilots, more regulatory sandboxes that are established, the more participants you're seeing in those, more white papers released, and also press releases. I think you'll see those signs coming. I don't think you'll see it in a sort of flash moment. But I agree with what Karen said. I think there's a lot of opportunities in this space, and it's a very, very exciting time to be in the industry.
You mentioned pilots that you might be seeing in the coming months. Are there any particular things that you'll be looking for there?
great question. Where I see the opportunity is the intersection between IoT, blockchain, crypto asset technology, and um, and AI, and the common denominator there is data. Now, obviously, with open finance being concentrated and being fueled or powered by data, how will these technologies intersect with each other is where there will be signs. I think there are so many ways it can go down. I think it has to be use case driven for it to have adoption. And that obviously depends on the business case. I think someone mentioned before about McKinsey forecasting, forecasting $1 trillion industry, and I think it's only going to grow. And we're only going to see more opportunities. But the noted caveat is that any opportunity that's capitalized on needs to be supported by rigorous controls, and also tailored commercial aspirations.
Great. There's a question here from the viewers as well on a similar topic. Do people trust AI yet? And what will make the general public trust them more?
Very, very good question. Do people trust it? Well, I think if you trust general humanity and general trust one another, I think there's to trust AI, but you have to become more familiar with it. And what's going to fuel that is more education. I think becoming more engaged with it and embracing it. I think we've seen the internet, for example, at the onset of that, everyone wasn't sure, everyone was used to existing technologies, but as more and more people got to know it, got to use it, I think that helped build trust. Now, your entire economies and businesses built on the internet, and I think we're going to see a similar adoption curve as Karen alluded to before.
This is a question for the panel more broadly. I mean, people associate generative AI with hallucinations, AI making up facts or getting things wrong and taking a very confident stance on the thing it's made an error about. Is that the kind of thing that is just going to put people off sharing their financial data with generative AI?
Yes, of course, I think people are naturally skeptical, but I also think we need to think future forwards. The generation that's coming into needing financial services, the young people, they have a completely different attitude to data. They have a completely different attitude to what's presented to them and what they trust and how they engage with it. And so I think whilst we may have an opinion based on our own life history and experience and how we've been brought up, I think that generation that's only 10 years away, they will expect this to be part of their lives. But I do think if I take the experience that we've got and where people are sharing their data with our customers for lending, many different kind of decisioning areas, plus our personal financial management app. As long as they understand what they're going to get out of it, people are prepared to share their data in return for getting access to whatever it is. So again, the word education's been used a lot. I think it's education and clarity. Often financial services is we use a lot of words and acronyms and make it quite confusing. Again, that's the benefit of AI. You can get rid of all of that detail that the customer doesn't need to know and make it really customer centric and customer focused so people understand. So there's just so many angles to this that you can use that education point and get people to be comfortable. But I definitely think we need to be doing stuff now for our future generation.
Thank you very much, Suzanne. There's a question here from Colin Henderson in the audience. I think it's for Karen. I'm not sure if we'll get an answer, but we'll try on this. What mix will the data set be at JP Morgan in terms of proprietary and external data? I think that's in terms of like building and training the LLMs.
Yeah, I'm going to give a high level response. So in terms of exploring those type of data sets and then subsequent use for LLMs, it's fair to say we're still exploring how to undertake that activity responsibly with the right controls. But additionally, we need our confidential data to remain confidential. make sure we're able to explain from a transparent manner what the model is undertaking or what the technology we're deploying, but ultimately how the accuracy of the answers are appropriate for the use case that we're trying to deploy it for. So it's fair to say that when we look and consider these models from a JPM perspective, we're really looking at balancing our responsibilities both from a regulatory legal perspective, application of use, and keeping confidentiality on our proprietary information. And kind of back to Michael's point, it still is early days, and this is a path, we're walking at the moment. So I don't know if that fully answers Colin's question, but it's the high level response I have.
I think that's really useful. My understanding of it is that one of the issues that banks broadly have is that they want to train the LLMs using very accurate data and ideally their own data. But the reality is that an LLM needs huge amounts of data in order to be trained. So how do you give it like sufficiently accurate data, but also data in sufficient volumes in order to do that without having to dip into things like chat pages on Reddit about finance, for example? Does anybody else want to engage with that question, or should we move on to the next one? Natalie, you work in the insurance industry. Can you talk to us a bit about how AI is changing your area of work?
Yeah, absolutely. I think it's twofold. Much as Suzanne mentioned, the insurance industry gathers huge amounts of data, huge. And it's really that ability to harness that data and to make it useful that's going to be a bit of a game changer for the insurance industry. We've got all this historic claim data, we've got credit scores, we've got social media activity, and how do we use that to improve the products that we're providing to people and what that offering is? In terms of a policy impact, I think we'll really see AI have an impact on professional indemnity, directors and officers, cyber, and also crime policies. People might be familiar with what we refer to as silent cyber, which was the position that we were in very much with the professional indemnity and D&O policies when cyber was really an emerging risk, which essentially meant that these policies weren't necessarily intended to cover cyber events, but because they weren't specifically carved out, insurers found themselves covering things that they hadn't intended to. So I think what we will see with those kind of products is a real carve out of AI claims, where AI has been harnessed within a business and it's resulted in some kind of loss. So I think we'll see either standalone AI products or possibly bolt-ons, which will come at an increased premium. I think people should expect a very forensic examination if you use AI within your business and you're looking at renewal or you're looking at placement. And that's really going to develop as we see claims come through. It's very, very early days, but I have seen claims coming through on the AI side in the form of American class actions using scraping technology where this AI will scour the internet for particular types of information, aggregate it, and then that data is sold. And I've seen invasion of privacy claims come off the back of that. I think insurers will also be driven by the regulators as well and how that evolves and how that develops. So very much as we've seen with GDPR, it's a bit of a kind of as and when it happens scenario.
So are you seeing examples of insurers using AI in order to process claims or design policies at the moment? And like what kind of examples have you seen?
Yeah, absolutely. I mean, in terms of very much, I would say kind of motor insurance and home insurance, we know that insurers are using AI to collect that data and to really aggregate it and to actually make decisions on claims, which we're seeing will speed up the process quite a lot. I think I saw a stat that it took something like 6 seconds for an AI to take a decision on a motor claim, where an insured can take a photo of the damage, upload it onto the app, and the AI will make a decision and it can make the payout within days.
Is accuracy an issue there, or is it like ultimately overseen by a human with experience in the industry that can spot any errors or other issues?
There are absolutely oversights in place, and I think that's really important for insurers. they're always going to want to keep an eye on that AI, and that goes back to, you know, how that AI learns, and it's always, I think, going to need that oversight.
Thank you very much, Natalie. There's another question here from the audience. Anyone that would like to address this, please do. How serious is the AI skills gap in the UK, and how can we possibly hope to train up enough people with both AI and open banking expertise?
I'd like to answer that one if that's all right, Will. I think the Ada Lovelace Institute actually did a study a couple of months ago on the AI readiness or adoption in the UK, and the results are varied, but it does show an increasing awareness. But I do think there's a general skills gap which does need to be addressed. And I think the government is taking sufficient means to do that. I think Rishi Sunak has indicated the need to build an AI safety institute, and various companies have also set up AI Center of Excellence. But I think it is something which needs to be addressed, and AI literacy is something explicitly covered in the EU AI Act. And I'm sure the panelists will probably have seen it in their personal experiences as well.
Bill, hi, it's Helen. I think we've lost your sound. I think you might be having a few technical troubles at Bloomberg. Okay, let me jump in while Will gives his technical team a nudge. Okay, we do have another question from the audience, so let's actually just widen it out a little bit, and I want to go to Suzanne. Suzanne, Money Hub. Money Hub, everybody in open banking knows and loves Money Hub for your personal finance management app. What you do in financial inclusion, we can see it on the map behind you. Talk to us about what you're doing in financial inclusion and how AI can be used for good.
Absolutely. Thank you for asking us that question. Glad everybody loves what we do. Yeah, I guess that it sits in a number of different areas. Financial inclusion has so many elements to it, I guess. You know, from anybody who really doesn't. I mean, the MAPS did a survey, didn't they, on what 79% of the UK population don't really know, are a bit too afraid to talk to anybody about when they got money issues, and 45% of the population really don't understand their finances. And for us, that's where AI, that translation of data, because this is what we've all talked about, this is what AI is. It's taking data and then turning it into something that people can use, understand, work with, and take away the kind of gobbledygook, or the bit that they don't know or haven't learned, and make it into something that people can understand. So we believe wholeheartedly in that 3D data, 360 view, democratization of data, making it available to everybody. And then for the organizations themselves, mentioned earlier about making better decisions. And Consumer Duty is a perfect, in our opinion, a perfect regulatory compliance that will take this forwards, because whilst it's often looked at as a, you know, a big stick negative from the FCA, actually it's an open door to allowing organizations to do this innovation. Data is held in, as Natalie was saying, there's so much data out there that organizations have, but they're all in product silos, they're all in different servers all over the place. They're not really designed to produce AI models and produce ways in which customers can access their own information and understand their own financial lives through that kind of AI translation. So Consumer Duty is a great vehicle to help. And I was talking earlier about coming back to that kind of financial inclusion. How do you help people who really do need help? You can focus the right people, I say, on the right time for that, but you can also just display that data back to them in a much better way so that they understand what they're doing, but the organizations themselves can use AI to detect vulnerabilities, detect those areas of harm so that you can improve outcomes. We're doing some modeling at the moment for a couple of high street banks, where we're building a framework using their data to detect those areas of harm based on using all of the products that they have with the bank and through open banking, using everything that they spend their money on, who they spend it with, what time they spend it, and what the potential outcome of that spending could be on their financial situation in the future. And we'll help then those banks to then talk to those customers, to nudge them, to message them, to encourage them to take a different course of action that will ultimately improve outcomes. But that's not a one-off thing. That's an ongoing encouragement to do the best for them and using it, as I say, in their language rather than in any kind of financial service product based speak, but using, as I say, my own behaviors of how I spend my money and talking to me through my data to encourage me to do something different.
So, Suzanne, you're seeing AI as positive and enhancing your product set then?
Yeah, absolutely. Any data can be used dangerously. We see that all the time in fraud and the way that people access information and then present it back. But our job as a fintech is to design products and services that help financial services organizations to deliver this data safely, securely, and in the right way. So yeah, it's a super positive thing. And of course, open banking and open finance is a brilliant platform to build it on.
Well, I share your optimism, and the questions and the feedback that we had before this panel session, our community around the world do too. Suzanne, you mentioned regulation, which is a lovely segue, if I may, to talk a little bit more with first Karen and then Michael around regulation. So, Karen, with the evolving regulatory environment, how are organizations even navigating compliance whilst integrating AI into open banking and maybe open finance? How are we actually navigating it all? Yeah.
Big question. Yeah, jokes aside, it's a key topic outside of AI and open banking as well. How are institutions, staying on top or staying abreast of the regulatory changes that are impacting their operating model with the advancements of technology? And that's in multiple spaces to ensure good outcomes, back to Suzanne's point, for customers. And customers can mean many things. And ultimately, it's usually an end user somewhere. And that end user can be a person, it can be a business, it can take many forms. But when you look at the advancements of regulation, I know Michael is going to speak to it a little bit more in depth as well, there's an evolving landscape. There's quite prescriptive when you look at the EU, UK, particularly in open finance, smart data, AI Acts, so on and so forth. But then you have different geographies also taking different approaches. And you have some regulators, MAS in Singapore is a really great example of, working with the industry to kind of really get thought leadership out there of what they expect in this space, how they see it going, and working with industry to get to a collective point of where this technology can be deployed. And then you look maybe a little bit closer in the European landscape and then into the UK, and you have the FCA taking a similar approach. And then you have wider geographies globally that are also grappling with this. But the key message here is that what may be correct today may evolve in 6 months' time. So it's a space that firms have to invest in to make sure that they understand what's coming for the products they're currently developing and may deploy in future state that may be impacted by changes in regulation. And Suzanne's point, consumer duty in the UK is a really prime example here, because when you look at open banking, yeah, you think of end users, but then you may not have firms deploying open banking that are used to dealing with the regulatory environment that comes with dealing with retail individuals and also smaller SMEs that are captured by that regulation. So it's a really good example of regulation for good, but the practicalities and the application of it are not straightforward. And the same is going to be true of evolving technologies in the AI space and the regulation or laws that are coming down track in Europe and further afield. Michael, I don't know if there's anything you want to kind of add on that.
No, the only thing I think you touched on all the points there, but I think the retail aspect is key. the consumer duty aspect, which we were touched on earlier, because they're seen as more vulnerable. And I think in an age where the skills gap is wider, for AI, I think the risk of harm to retail investors only increases, especially when they're dealing in complex environments or when their data being handled. I think there needs to be more transparency. I think regulation, you know me, it will has a very important play in building trust. I think in this era where data is the oil and AI is the combustion engine, it is going to be absolutely paramount.
Sorry, I'm sorry about the technical
Will has
interruption.
rejoined us. Welcome back, Will. We hadn't
Yeah, I'm
predicted
very
that
sorry
one,
about
had
that.
we? Yeah.
Yeah. So on the question of regulation, which jurisdictions do you think are getting it particularly right in terms of like striking a balance between protecting consumers but also allowing innovation to happen?
Well, I think it's a very good question. There are a lot of policy approaches around going on globally. I think the EU, not just because it's the first, but their approach is very good for the market. It gives stability. They've clearly demarcated the need for it to be risk-based approach to the AI systems, and they've kept it sort of fairly compartmentalized in that sense. And I think it's very good because it sets a blueprint and it gives there's little room for ambiguity. You contrast that with the UK's proposed sectoral approach, which they haven't even formalized. And at the FT Future of AI Summit event I'm attending today, they've even outlined that they don't want to rush anything, which may suggest that they don't think that they haven't really got the risks figured out yet. Whereas I think the EU are very advanced in that sense, and I think they're taking a very good approach. And the US, with the recent White House executive order, also show a very solid understanding of the regulatory environment and clearly engaging with the Silicon Valley tech organizations. Good can be subject in that sense, Will. So I think we just really have to work and try and protect against the risks against.
Is there a risk that the regulators just can't keep up? Like, so it's fine for them to talk about how we don't want to rush this, we want to get it right, but the innovations in the industry are happening so fast. Is there a risk that what happens in crypto happens here, which is the crypto boom and bust has been and gone, and the European Union is still talking about what regulation they might ultimately like to introduce at a future date?
Oh, for sure. I think you've hit the nail on the head there. With the crypto boom, you're seeing Meek coming into force next year, but I think in that sense the horses are already bolted, and I don't think they want to make the same mistake with AI. I think they want to set they want to set a firm and stable precedent, not early to make sure that it's done sustainably and to avoid all the pitfalls of fraudulent schemes that were perpetrated in the crypto industry. I know that the technologies are different in many aspects, but I think AI, they have an opportunity to get it right, and they have an opportunity to get it right for the long term.
Thank you very much, Michael. I appreciate it. Suzanne, can AI be a catalyst for improving financial inclusion, and to what extent and how?
Yeah, whilst you were away, we did cover a little bit of this, but I'll put a little bit.
Don't feel
right.
feel free to pass on that one if that's already covered.
Yeah, no, I think the only other one I was just going to talk on in terms of financial inclusion. We talked about vulnerabilities, obviously under consumer duty and detecting harm. I think the financial inclusion for organizations as well is there for them to be able to smaller organizations to be able to get on a good foot in terms of how they provide products that can compete with the larger organizations by using AI, by using data to make better decisions for their customers so that their businesses can perform better as well. So better efficiency, better cost controls, and reducing fraud. We look at obviously in the lending market in terms of risks, and one of our lenders has seen a 15% dropout through natural by using open banking as part of their decisioning. They see 15% of those applicants dropping out that they see are fraudulent. So there's a self-select to come out of that. So using data, using AI to make decisions can help, as I say, improve the cost for a business. They also see with customers who they've used open banking to make that better decision. So they've looked at that person's actual affordability, and that loan goes on to perform better at a rate of 40 to 50% against other loans because they've used the data, they've analysed the data, they've identified risks, and they've been able to make better decisions by using that. So they're actually seeing better performance. So this AI isn't just about the consumer all the time, it is about the organizations, and therefore they can offer products and services to more people because they can make that better decision. They can see the information more clearly, and yeah, be able to grow their business on that basis.
And the loan would perform better, presumably, because the AI is better at weeding out customers that are at risk of defaulting on the loan.
Absolutely. So the underwriters can make decisions on good, reasonable affordability based on income and expenditure, and then all those other things that could impact their ability to repay in the future, like addictions, gambling, risk factors, etc. Because they've got much more access to the data. Yes, they're making a better decision with more data.
So that sort of suggests that the AI is able to access medical records, for example, if they know about somebody's addiction, and that must raise all kinds of privacy issues, I would imagine.
So no health data, no addiction can be based on, if you think about when people are spending money and what they're spending on, you can see what they're spending on, but actually the time of day that they're spending the money on could imply an addiction as well.
Yeah.
There's so many angles to this that if you take it if you take it in isolation, it doesn't mean anything. But if you take it in relation to everything else that sits around that customer and their behaviors and what they're doing, this is super, super insightful. Some of it's implied, some of it's actual. And yeah, health data, wow. I mean, you start bringing that into the picture. There's an awful lot of regulatory stuff that we need to go into to do that. But, finance data itself has got so much to offer that we can make much better decisions here and now.
So do people have to explicitly consent to their bank accounts effectively being turned inside out so that a potential service provider can see everything that they've spent money on? Or
absolutely. Open banking, open finance is all explicit permission for that customer to share their data. However, we see with our customers that acceptance to share the data is over 80%, because if your use case is absolutely clear as to why you're going to share your data, there's a give to get here, the customers are prepared to share. And that number is going up. Only 6 months ago, it was around the 75%. It's now at over 80%.
Thank you very much, Suzanne. There's a question here for Natalie. How do we strike the right balance between automation through AI and maintaining a personalized human touch in customer interactions? And I guess that does assume that humans will always be polite and warm, which is perhaps a misconception in itself. Like perhaps a chatbot will be more polite in some instances.
Yeah, absolutely. I think that's the thing. There's always going to be some elements where you can't beat that human touch. I think we've all been in those situations where you're stuck in that kind of call cycle of trying to get through to a person, or you're just talking to a chatbot. So I think it'll be difficult to completely erase humans, going back to the kind of point that Helen raised right at the start. But I think it will really drive customer experience. So, having all that data, streamlining the process, the ability to analyze data patterns, like Suzanne was saying, detect and prevent fraud, which will all ultimately improve customer experience. And it does free up that workforce, it increases the capacity for people to have that freedom and that ability to have one-to-one contact with their customers. And it's probably going to be contact where people need it. You know, it's emotionally driven. I think it was Suzanne said, you know, people are very reluctant to talk about their financial situation. So I think if you have to do that, you want to do it with a human, not necessarily with AI. So there's a real balance there. And I think where companies do utilize AI, that underlying initial infrastructure is so important. You know, we talked about building confidence in the public and using it to benefit people. I think if you don't have that infrastructure, if it's glitchy and it doesn't work, people are going to be more reluctant to use it and to trust it.
We've only got a few minutes left. I wonder if everyone on the panel would just very quickly like to address what their industry might look like 5 years from now, in terms of the changes that will have been made due to AI. Karen, would you like to go first?
I'm happy to go first. So if you look at the space I'm in, we're considered incumbent bank, and I'm sure a lot of people are figuring out how does that fit together with our business model. And the reality is we are looking at how we unlock business value at an organizational level by the use of new technology. And that might mean enhanced customer experiences, but it also may mean in our payment processing space. And, you know, we're quite substantial in terms of our footprint when it comes to our correspondent banking and moving money around the world. So how can we enhance that experience? And then you look at trust and safety. How can we increase that, whether that's from anti-fraud measures, anti-financial crime, sanction, control and oversight, and so on and so forth. So there's definitely means and ways it can be deployed in the industry I'm in for the betterment of our customers, our internal organization driving business value, but ultimately people that are just, you know, undertaking payments every day, day in, day out. So I definitely see the value here in our space to just unlock that value across the organization. And we're quite a large organization, so you could imagine the returns that we would get in terms of deploying such technology.
Will it reduce the headcount ultimately?
I would say it's about, you know, the headcount being able to work on tasks that require further insight. So when you think about anything that's deployed initially, it's how can you build it into your current processes and optimize your processes thereafter. So if you look at an operational process, it may be a consideration of, could that be your level 1 triage, but you still have people for the additional touch point and review for either something that's considered riskier activity or for human interaction. Short answer is humans are still going to be here. We're just going to work alongside AI.
Yeah, lovely. Thank you. Suzanne.
Yeah, I agree with that wholeheartedly. Humans are still going to exist. We're still going to need us. We still need to hold people's hands with things. So I think, what does our industry look like? It's open data, open finance, open banking's just started. It's just the start of what's going to come. And I guess we see it as life integration. It'll blend into every part of everyday life, affecting things from utility payments to shopping. But decisioning and open banking payments definitely be a high growth part of this. Smart tech, AI, machine learning, obviously tailor financial services to individual needs, making advice on products, as we talked about, much more personal instead of generic. I actually really only want to hear about stuff that's applicable to me in my life right now, not something bland and generic. Financial inclusion, we talked about, obviously, definitely open data combined with those AI models will enable more people to be served in those real niche markets, those edge cases where people can't get access to money now. We definitely will be saying, is the money right for you rather than are you right for the money? And then, yeah, I think I can see regulations going to continue to evolve to protect customers and their data even more. But as I've said earlier, not just the customers, the banks, the financial institutions themselves, so that they can use data, because that fear of being able to truly jump into the data is still prevalent across these organizations. We still have to push really hard to get people to think, you know what, you really can look at this data and make great decisions, because that's what your customers want you to do.
And Natalie, how about insurance? Because I know there's a perception, rightly or wrongly, that the insurance industry is perhaps heavily paper-based, or has been more paper-based traditionally, more recently than banking has, and also that things are very based on human relations and people knowing each other in the industry. Like, how much will AI change all that?
I think it will change it massively. I think I completely agree with your comments that insurance has always been paper-based for years and years, and there is a real thing about the insurance industry. You know, it's kind of who you know, it's that human connection. But I think the pandemic started to change that for the insurance industry. People working from home, it meant that it had to evolve quickly, and I think it was embraced a lot more than people expected it to be, and technologies were developed very quickly to allow us to place risks and to sign risks remotely without having to physically be, you know, in an office, which had never really been considered before. So I think now that it's already become part of the industry, that electronic way of working, I think people will just grasp it with both hands, and I think it will really improve the products and the services that we can really provide to clients.
Thank you very much, Natalie, and we'll pass over to Michael very quickly, and then back to Helen.
Thank you. I think we're going to see a very, I'll tackle this from two sides, professional services aspect, the regulatory aspect. Professional services, I think we're going to see it complete augmenting the way services are delivered. I think 2 weeks ago, for example, BCG did a controlled study where one group used generative AI, one didn't. And there was a 40% increase in productivity for ones who used it. So I think we're going to see far more investment in AI, and the capabilities are going to probably be ones that we can't even imagine today or comprehend. It's changing on quite literally on a daily basis. I think EY have invested significant funds in this as well. So the way services are imagined, the value is exchanged and delivered is going to be very different. And I think perhaps we should shorten the timeframes, even maybe not a 5-10 year outlook, but maybe even a 6 month, 1 year outlook. With respect to regulation, I think we're going to see the EU AI Act having a pivotal impact on the industry as a global blueprint for AI, in the same way GDPR was for data protection. And I think we're going to see a lot of, but it's going to have to be agile. Someone at the FT today mentioned how a regulation may have to be more agile, in the same way that you have software development practices being agile. So even the way that legislation is crafted and developed as a process, as well as the substance of it, will change. But I think with all things, humanity is going to have to work together to embrace it. And in a world where the only certainty is change, we need to accept that and move progressively forward.
Great. Thank you very much, everybody. And I'll pass back to Helen at this point.
Oh, Will, thank you. That was absolutely a fascinating panel session. Thank you so much for hosting it. With Michael saying that the only uncertainty is change. I love that as a final takeaway. Will, you've worked hard today hosting our panel session. I've got a question for you. I'm curious, as you know, a Bloomberg reporter, you are going to be talking to the largest institutions in the UK and around the world. So I'm not going to quiz you on that, but what about your industry? How is AI going to affect your industry?
Journalism, like journalism broadly, I feel like AI will affect everything, and it would be naive to think that it can't affect my job or jobs like it. But on the other hand, a lot of what I do is persuading people to share information that isn't public yet, which I think that's not easy for a chatbot to do. Like a chatbot, like ChatGPT, can look backwards at what's been written previously, and based on that, it can guess at what words ought to come next. So it can write in the style of me, or it can write in the style of anybody else. What it can't do is persuade someone at a really big bank to provide information that isn't in the public domain yet.
So personally, I don't feel scared. I mean, time will tell whether I'm right or wrong on that. But some things do just take. I think if I was a newspaper columnist that looks at the news today and then writes a column based on that, I'd be quite worried about what ChatGPT could do to my job.
And I'm sure your editor wouldn't expect any allow you to do the hallucinations that
humans can hallucinate too. Well, hopefully less frequently, I think.
But can I just say thank you to you, Will, seriously, and to all of our panel, to Suzanne, Natalie, Karen, and to Michael. You have really given us a masterclass. My WhatsApp is actually alive with feedback, which I'm going to be sharing across our channels, which is a lovely segue to say that we will be putting this out on YouTube and across our channels as well as our newsletter. So to everybody, please share it and to watch. We actually hit for our last campfire, when we put it across our channels and our partners' channels, we actually hit 1 million engagement, which for open banking and open finance, that is a phenomenal figure. And I have got an inkling that this campfire that we have all helped to shape will maybe even better that. So let me thank you all again for your expertise and sharing it so very generously. And finally, let me thank the OBE team who work exceptionally hard behind the scenes to make this happen. And thank you for tuning in and for watching. Thank you very much. You're wishing you the very, very best of health. Thank you and bye for now.